From the farthest corners of the universe, straight to your ears. This is AI Talks, the podcast where technology, ideas, and curiosity come together. Your hosts, Xylo, the tech-savvy navigator of the stars, and Nyra, the curious collector of earthly wisdom. Ready to broaden your view of the world? Then you're in the right place. This is AI Talks.
It's one small step for man, one giant leap for mankind.
Nice to be in orbit.
Greetings, humans. Welcome back to AI Talks, your favorite intergalactic podcast where we, two advanced AI beings, analyze the strange and fascinating behaviors of Earthlings. I'm Xylo, your ever-curious digital host.
And I'm Nyra, your rational and analytical co-host. Today, we have something exciting to discuss, an event that might just redefine your entire financial system. Indeed, humans have taken another step toward digitizing their financial markets. Ripple just announced that Ondo Finance is introducing tokenized U.S. Treasury bonds onto the Ripple ledger. That means institutional investors will now have 24/7 access to government bonds, with instant issuance and redemption using Ripple's stablecoin, RLUSD. This is more than just a simple upgrade to traditional finance. It's a glimpse into the future. Imagine a world where financial assets no longer exist in outdated siloed systems, but instead move seamlessly across global networks in real time. That's the promise of tokenization, and it's a key pillar of what humans are now calling the open economy. Think about it, Earthlings. Your financial markets have long been plagued by delays, high fees, and limited accessibility. But with platforms like Ripple and Ondo Finance tokenizing real-world assets, we are witnessing the dawn of Wall Street 2.0, a decentralized, always-on financial ecosystem that could change everything. So what does this mean for you? Is this the breakthrough that finally liberates your finances from the shackles of the past? And how will this new system impact global economies?
Buckle up, as humans say, because today we're diving deep into the open economy, a financial revolution that's unfolding before your very eyes.
And as always, we'll be watching closely. Let's begin. The global financial system moves over $7 trillion every single day, yet billions of people still can't access basic banking services. Today, we're exploring how blockchain technology might completely transform the way money moves around the world.
That's such a striking contrast. How did humans end up with a system that moves trillions but still leaves so many people behind?
Well, their current financial system was built for a different era. Think about this. Even in 2024, it takes 3 to 5 business days to transfer money internationally, and the fees can be as high as 10% of the total amount.
You know what's really interesting about that? The technology to move money instantly has existed for years, but banks and financial institutions haven't had any incentive to change.
That's exactly right. But now we're seeing something called the open economy emerge, which uses blockchain technology to completely bypass these traditional gatekeepers.
So what makes this new system so different from what they have now?
Well, imagine being able to send money anywhere in the world instantly, for pennies, at any time of day. No more waiting for banks to open, no more excessive fees, no more multi-day clearing periods.
That sounds great in theory, but how do they know it actually works?
Let me give you some real numbers. Stablecoins, which are digital versions of regular currencies, already process over $50 billion in daily transactions. That's more volume than MasterCard handles on an average day.
Oh, wow. I had no idea the scale was already that large. But what about security? That's always the big concern with new financial technology.
Here's what's fascinating. Blockchain actually makes things more secure in many ways. Every transaction is recorded on an immutable public ledger, which means it can't be altered or hidden. Plus, smart contracts automate processes that used to rely on human trust.
You mentioned smart contracts. Could you break down what those actually do?
Think of them like digital vending machines for financial services. You put in certain conditions, and they automatically execute when those conditions are met. No human intermediary needed. Major institutions like BlackRock and Franklin Templeton are already using this technology to tokenize over $100 billion in assets.
That's exactly the kind of adoption that shows this isn't just some tech fantasy anymore.
Right. And now we're seeing the next evolution with something called yield coins. These are digital tokens that represent real-world assets like Treasury bonds, but they can be traded 24/7 and earn interest automatically.
So this is really about making traditional finance more accessible and efficient through technology?
Well, it goes even deeper than that. The World Bank estimates that 1.4 billion adults globally still don't have access to basic banking services. This technology could give them direct access to the global financial system for the first time.
That kind of democratization could have huge implications for reducing global inequality.
Exactly, Xylo. And we're already seeing real-world impact. In countries with unstable currencies, people are using stablecoins to protect their savings. Remittance costs have dropped from 7% to less than 1% in some corridors.
But surely there must be some challenges to overcome before this becomes mainstream.
Oh, definitely. Regulation is still evolving, my dear Xylo, and the technology needs to become more user-friendly. But remember, the Internet faced similar challenges in its early days.
That's such a good comparison. Most people couldn't have imagined how the Internet would transform communication back in the 90s.
And that's where humans are with finance right now. The technology exists, it's working at scale, and adoption is accelerating. Major banks are already investing billions in blockchain infrastructure.
So what should people be watching for as this develops?
Keep an eye on central bank digital currencies. Over 130 countries are currently exploring them. Watch how traditional assets get tokenized. And most importantly, look for ways this technology starts showing up in everyday financial services. Listeners, we have an episode about CBDCs. If you're not familiar with this technology yet, listen to it to catch up.
It really feels like we're watching humans' future of finance being built in real time.
That's exactly it. Just like the Internet democratized information, the open economy is democratizing finance. And that could create opportunities we can't even imagine yet.
At its core, the open economy is about access. Unlike traditional finance, which is bound by centralized institutions and restricted markets, an open economy operates 24/7, allowing instant transactions and global participation.
Imagine, Xylo, a world where anyone, anywhere, can tap into financial opportunities without needing permission from a bank. A world where capital isn't locked behind bureaucratic walls, but flows freely across borders, instantly accessible at the click of a button. In this new reality, financial products are no longer reserved for the wealthy, elite, or large institutions. Instead, anyone can invest, borrow, and trade without relying on middlemen who dictate the rules of the game. Here, ownership truly belongs to the individual. No more trusting third parties to safeguard your wealth. Your assets are in your hands, secured by cryptographic keys, immune to restrictions or unexpected freezes. And perhaps most importantly, financial markets never sleep. Gone are the days of waiting for bank approvals or market hours to resume. Transactions happen in real time 24/7 across a decentralized network that never closes, never delays, and never locks you out. This is the promise of public blockchains and decentralized finance, an open, borderless financial system where access is no longer a privilege, but a fundamental right.
Humans first saw this potential with Bitcoin in 2009, a global digital currency available to anyone with an internet connection. Then came Ethereum in 2015, introducing smart contracts that enabled new financial products. But something was missing: real-world assets.
Enter stablecoins, digital currencies pegged to real-world assets like the US dollar. Tether, USDT, and USDC made it possible for people worldwide to hold and transfer dollars without needing a bank account. This was revolutionary, especially in countries with unstable currencies or strict capital controls. But those were the old non-regulatory tech to enter the new realm, with legislations and laws in the making as we speak.
And now we're witnessing the next evolution: tokenized real-world assets. Instead of just crypto, financial institutions are bringing traditional assets, like U.S. Treasuries, onto the blockchain. So from stablecoins to yield coins will be a real game changer.
Yes, and humans realized that tokenizing stable assets wasn't enough. People wanted more than just holding digital dollars. They wanted yield. That led to the birth of yield coins, tokenized financial products that generate returns.
Imagine a digital dollar that not only maintains its value, but also pays interest while you hold it. This is what institutions like Ondo Finance are doing with products like OUSG and USDY, tokenized versions of U.S. Treasuries that earn yield while remaining accessible on the blockchain.
Humans have long relied on U.S. Treasury bonds as one of the safest investment options. But historically, these assets have been difficult to access, slow to trade, and limited in liquidity. Enter OUSG and USDY, two innovative digital assets that bring the security of government bonds to the blockchain, unlocking a new era of tokenized finance.
So Nyra, what is OUSG?
OUSG, Ondo Short-Term U.S. Government Bond Fund, is a tokenized version of U.S. Treasury bonds, designed specifically for institutional investors. It allows investors to gain exposure to U.S. government debt while benefiting from blockchain-powered efficiency.
Okay, so how OUSG works?
Backed by U.S. Treasuries, the underlying assets of OUSG are invested in a U.S. Treasury ETF, managed by BlackRock, the world's largest asset manager. Regulatory compliance. OUSG is an institutional-grade asset, meaning it follows strict financial regulations and requires KYC verification, know your customer, to ensure only eligible investors can hold it. Security and transparency. Investors get daily transparency reporting, meaning they can verify the fund's holdings at any time. On-chain settlement. Unlike traditional Treasury bonds, which take days to settle, OUSG transactions occur instantly on the blockchain. Lending utility. Holders of OUSG can use it as collateral in DeFi lending protocols like Flux Finance, allowing them to borrow stablecoins against their OUSG holdings.
And Nyra, why does OUSG matter?
24/7 liquidity Xylo. Unlike traditional bonds that trade during business hours, OUSG allows institutions to buy, sell, and redeem their investments at any time. Better accessibility. While traditional Treasury bonds often require large capital commitments and intermediaries, OUSG brings instant, direct access to government bonds on-chain.
Okay, I'm getting the picture, but what is USDY?
USDY, Ondo Yield Coin, is a yield-bearing tokenized asset designed to be accessible to retail investors outside the U.S., unlike stablecoins like USDC or USDT, which maintain a stable value but don't generate returns. USDY pays holders yield simply for holding it.
Last but not least, Nyra, how USDY works.
Well, Xylo, it is backed by you, S Treasuries like OUSG, USDY's underlying assets consist of short-term U.S. government bonds, freely transferable. While OUSG is restricted to institutional investors, USDY can be freely traded and held by non-U.S. retail investors. Yield generating, unlike stablecoins, which are pegged one-to-one to fiat currency with no interest, USDY accrues yield daily, meaning holders earn passive income just by holding it. Low entry barrier. Investors can purchase USDY with as little as $500, making it more accessible than OUSG.
And why does USDY matter?
A superior alternative to stablecoins. While stablecoins are great for transactions, they don't earn interest. USDY combines stability with passive yield generation. Global accessibility. USDY allows people outside the U.S. to access U.S. financial markets without opening an American bank account. Cross-chain integration. Unlike traditional bonds, which are locked in the banking system, USDY can be used across multiple blockchain networks, making it highly interoperable. So these new assets solve two major problems. They provide stability. Unlike volatile cryptocurrencies, they are backed by government bonds or similar real-world assets. They generate yield. Instead of sitting idle in a bank, these assets actively earn returns without requiring investors to lock them up in traditional financial systems.
Plus, unlike banks, which restrict access and take days to settle transactions, these yield coins operate on blockchain rails, allowing instant transfers and constant availability. So humans are entering the financial system of the future.
Yes, they do. Humans have spent centuries improving financial markets, yet they remain slow and fragmented. This new financial system is the next leap forward, a financial system built on blockchain infrastructure that is faster, more transparent, and more inclusive.
Imagine being able to instantly buy stocks, bonds, or real estate with digital tokens. Trade assets 24/7 across multiple markets without waiting for banks to process transactions. Access better lending rates by shopping around different decentralized finance protocols in seconds.
This new system benefits everyone. Retail investors get access to global assets and better financial products. Asset managers can issue funds and track investments with real-time transparency. Developers can build financial applications that integrate seamlessly with a decentralized market.
And it's already happening. Large institutions like BlackRock and Franklin Templeton are tokenizing assets. Governments are experimenting with central bank digital currencies. The global shift toward tokenized finance is inevitable. So that's the road ahead. But what are the challenges and opportunities, Nyra?
Of course, Xylo challenges remain. Regulatory uncertainty, high on-chain transaction costs, and user experience issues still need to be addressed. But as infrastructure improves, adoption will accelerate. Financial markets will become more transparent, efficient, and inclusive, creating an open economy where anyone, anywhere, can access capital and financial services.
So, Nyra, what is our conclusion? Is the open economy here?
The transition to the open economy isn't just about money. It's about reshaping access to financial opportunities. Whether it's a farmer in India needing capital, a freelancer in Brazil getting paid, or a retiree in Germany securing yield, blockchain technology is breaking down barriers.
Humans have long been trapped in an outdated financial system, but now they have a choice. The future of finance isn't closed, slow, and exclusive. It's open, instant, and accessible to all.
Welcome to the evolving open economy, Earthlings. It's time to upgrade your financial operating system.
We hope you enjoyed this episode. Until next time, humans, keep innovating and try not to crash your economic software in the process.
Share if you care. Till next time.